Actually, let's see. Let's see. Yeah, the mean is 16. Actually, no. Okay, let's see what it says. Current market valuation Y charts. See, again, everything is just a little bit different. Everybody has just a little bit different. So this is what current market valuation says. The P/E ratio is a classic measure of a stock's value, indicating how many years of profits at a current earnings rate it takes to recoup investment of the stock. The current S&P 500 10-year PE ratio is 28 even. This is 39% above the modern market area average of 20. And so that suggests that the market is overvalued. But that's the market we're in now. In general, we're in an overvalued market. Inflation's rampant. They print money like crazy. So it's not like the olden times. And so that's why I kind of like companies with lower PEs because they're not overvalued by that ratio. But you have to go into a lot more. Like you have to look at their assets, you have to look at their liabilities, um, because even though they're earning a lot and their price is low, that might be because they're really bad with their money. Like they're so much in debt. Investors understand that, and that's why they're not in the stock pushing it up. So it's just one little piece of the puzzle. But when I started to formulate it, it was a good one.
And basically, it really just comes down to leadership and decisions, like the right people, like the right decisions, not doing things offhand, off top.
100%. And that's the issue with this market these days because when in 2021 happened, the stock market was great, but it was a lot of free money for these businesses, which gave them incentive to lie, to do things you normally wouldn't do because the money was really good and there's really no repercussions. How many businesses, how many executives are really going down right now for stock fraud or pump and dumping or anything? None really.
Yeah.
Only retail, only small fries are going down
Right.
per usual. And so yeah, that's why risk management. So I look for good leadership, obviously, but there's only so much you can do for good leadership because at the end of the day, these guys are salesmen and they got to make money for themselves. So will they lie to you? Yes. So that's why we use risk management. You only nibble here and there. Don't go all in on anything because it will humble you quick.
Yeah, for sure. Appreciate it.
So let's finish up with my article we talked about. So I got in a little bit of a Facebook discussion with somebody who said, "Oh, you really didn't predict anything with Saturn Enterprises." I said, "This is what I said." With planet Saturn Cronus entering the last zodiac sign of Pisces, equities companies that should do well will be in the financial sector. And you have to have the mindset I have. Value investor, I'm looking for discounts as we're getting right now as they're falling. Within the sector, this includes banks, insurance, and asset management companies. The companies within the industry that prove to be flexible and fluid, water, Aquarius, Pisces, fish, with the changes in the world will be huge opportunities for investors looking for discounted growth in the next few years, which we're getting. Like you said, March 7th, boom, boom. So I think we're spot on. I think we're in the right stock for SoFi. I think is going to be really well in the future. And also, what's interesting about Pisces, it spans 330 third degree to 360 degrees celestial longitude. So again, that 33 is popping up 33 degrees. That transformation of that level, you're going to the next step, which is very important. A 330 degree zodiac, 330 zodiac degree, 333 English ordinal. Big banks are fisheries in the economy, 333 in ordinal. So these are the things that really started to pop up, and this dropped again February 13th. So we were well aware what was popping off, well aware. So the last 5 minutes, I'm just going to let you guys know what we have in the short term. So next month I have to think. I don't know if I'm going to be adding any more stocks to the divvy pack for now. I kind of feel like the market might take a downturn a little bit, not like a huge crash or anything like that, but um, not like a huge crash or anything like that, but something just to sit back and watch on. The S&P is looking pretty good. I'm gonna pull it up to see what we got going on, and hopefully moving forward, we'll have more people. But again, this is the first time, and I got to be a salesman and bring people in and stuff like that. So again, thank you guys for coming to this. It was amazing. A couple minutes left.
Hey man, I really appreciate it too, man. Honestly, I know you put a lot of work into this. So I was really excited to jump on, and I definitely learned some things. And I'll go back through that PowerPoint presentation. Continue the conversation, man.
Yeah, man.
For sure.
So before we end, I'm just gonna look at the S&P real quick. So you see what's kind of happening. You see this was COVID times right here, and so we had the COVID crash right here, and we just boom went straight up, and this was the top of the market, and we've been in a downtrend ever since. But look at this. It's been a full year. It's been a full year in this trend right here. That's a lot of accumulation. So this is definitely a bottom out of the market because the S&P never really works like that. It always kind of just goes slowly to the right side. And so I think this provides a lot of opportunity for us.